Analysts at Zedcrest note that Nigerian equities have sustained a bullish run this week. They highlight that the performance reflects strong investor confidence despite mixed trading activity across the market. Meanwhile, the Nigerian government has removed the 5% excise duty on telecommunications services. And I have Aladegbaye. He joins me now to unpack the performance of the market this week. Thank you so much for your time today, Samuel. And let's start with the performance this week. What has been the biggest issue in the market this week for you?
I mean, so far we've seen the market start to pick up steam, some of following those losses that we saw in August, where we're seeing investors start to pick some pockets of space in some sectors. You know, pretty much so far, week to date, we've seen gains in all the sectors, right? Yeah. In all the indices. So we're seeing it start to pick up steam so far.
All right, but let's get into the performance of the market in this third quarter. I've seen the all-share index up about 15% in Q3 alone. Speak to what's playing out there. What are the underlinings?
I mean, so on one thing, the major driver that we're seeing so far is tapering inflation, right? And that's also filtering into some of these companies' finance costs. If you look at the finance costs for most of the sectors, consumer goods, agri, industrials, it's all come down substantially. Yeah. And that's also boosting profits after tax. Then you also look at the reforms that are going on sector-wise. For the telecom sector, you know, we have the liberalization of the reform that we've seen so far with the revision of tariffs.
Yes.
Tariffs that we've seen. And also, if you look at the insurance sector, we've also seen the reforms that we've seen with the Nigerian Insurance Reform Act, and that has also filtered into the sentiment that we've seen there. Banks have also picked up steam, but these are the two major sectors that have really seen, you know, gains on traction in this quarter.
Let's talk about what the oil and gas space and what's playing out there. We've seen that more or less was on the decline, but now we're seeing some gains coming in, but the market's still in the red. But what's your outlook for the rest of the year for the oil and gas sector?
You know, so it's an interesting one because last year was a very good year for the oil and gas space, but so far what we've seen with Brent prices that really filtered into some of these companies' names. For example, let's say Seplat now that was able to record about $800 million revenue in Q1, came down to substantially $588 million in Q2. And I expect that, I mean, we might see some stability there, but it's not really going to be as significant as we saw last year because of the tapered oil prices. But
looking at full year in terms of the performance of some of the key names in the oil and gas space, for you, what would you say are some of your big top picks?
Okay, so that's another good angle. I would say, you know, if I'm picking some select names, I'll say stick to upstream names for now, because we do downstream names, that's Aradel and Seplat, to be precise. With the downstream names, we haven't really seen their performance as well. Eternal has shared a lot of his losses, Total as well, because of, you know, the market share that we're seeing them actually try to battle for with the commencement of the Dangote refineries operations, and that also hampered their top and bottom lines, to be honest.
Let's get to the industrial goods and to speak to what we've seen play out this week so far. Yeah, we saw the market. Yes, this quarter industrial goods has been on the roll, but then this week as well we saw some up movements there. What's playing out there?
I mean, so the story this week in the industrial space has been all about WAPCO. Right, we've seen, you know, there was a period of time recently where there was some of uncertainty following the acquisition by Wholesale, and pretty much coming into this week and last week actually, we've seen that actually start to filter out of the market. We've gotten more color as to how much they're actually going to acquire of the company, and we've gotten more information on that deals, and investors are starting to take their positions. You know, there's a bullish sentiment all around in that particular sector as a whole, but just because we have more clarity on that specific name, investors are starting to take their positions.
Yeah, because looking at the best performer in this quarter so far, the insurance sector, would you say it's more or less people taking position for the reforms to kick in?
Most definitely. I mean, the recapitalization is a very positive news. We saw how investors digested the banking recapitalization. Obviously, it strengthens their asset base. Also, on top of that, you also have some companies, petrol fuel stations, building and construction companies that have been mandated to take on insurance policies for some of their assets. That has also filtered into insurance names. Also, another driver, we've seen a lot of these companies record double-digit growth in top and bottom line, and that was filtered into their profits. A lot of them, they also have a lot of fixed income assets in their portfolio, so they are investing in a high interest rate environment, and that's also filtered into their earnings.
Yeah, because we're looking at some of the best performers so far this year. We're looking at the insurance companies up about 78%. We're looking at the consumer goods up 82%. Who do you think is going to be the top, who's going to take pole position this year?
I mean, if you look at the sector that has actually had so much room for growth is insurance. Right, we've seen a lot of their names. Big names like ICO done almost 200% so far this year. The consumer goods names, don't write them out, they're still doing as well. doing good as well. But I think in terms of the amount of upside that you actually see, because on the back of the fact that, we're having an improved macro environment, you also have the reforms that have come into play, and that's really expected to support the insurance sector going into the end of the year.
But you don't think that this third quarter surge from the industrials could see them more or less sideline the insurance and the consumer goods?
I mean, so as of now, I still see a bullish, outlook for most sectors.
Yeah.
But I think if I was to pick out one,
pullback for
the industrials,
yeah,
we could see. The rally. But as of now, it's all looking good.
Let's talk about that 5% excise duty is being scrapped for the telcos, and what impact do you see for the big names there?
I mean, so by our estimates, right, the 5% excise duty that has been scrapped, maybe it was previously contributed about maybe just north of 200 billion naira to the government's tax revenue. I don't really expect anything significant because it's not really a lot of these companies. Maybe the sector as a whole is generating about 6 trillion naira revenue. 200 billion is kind of negligible in that regard. But I mean, for the consumers, those of us that were actually paying those excise duties, I mean, it's a positive outlook all along, and I also expect that to filter into our wallets and make us, free up a little more cash.
But looking into next week, what's your biggest expectation in the market?
Okay. My biggest expectation is I expect this thing to continue to pick up. So far in September, we've seen about 2.5% gain in the ASI, and I still think that just some pockets of opportunities there. The banks that were beat up historically, as they start to release their earnings, I expect that this will be a good earnings quarter for them, and I expect some investors to take positions post that as well.
All right, time to take position, you say, but thank you so much for your time. Samuel Aladegbaye, the investment research analyst at Zedcrest Wealth.